Hi guys, welcome back to the channel. Welcome to the second video of this series. In the first video we discussed what a financial model is and why you might need one for your business. If you haven't seen that video, click on the link on the top of your screen or check out the link in the description below. So in this second video we'll talk about basic model housekeeping. And by model housekeeping I mean the things that make it easy for other people to use your model and to follow what's going on in it. No one wants to look at a model which is poorly formatted, poorly structured. They don't understand where it starts or where it ends, or inputs and your outputs are mixed up. No one wants to use a model that's like that. When you send your model to your investors, you want it to be very easy for them to follow and so that they can understand your business the way you want them to. So the principles we'll talk about today will help you achieve just that. So let's get into it. So the first thing we're going to talk about is the formatting of your inputs, your workings, and your outputs. Now, first things first, your inputs and your workings and your outputs should be separated. You shouldn't have a model where the inputs and the outputs are all mixed up and it's very hard for someone to know where they should go so that they can change one specific thing. You can see in our model here, we have our inputs in this tab here and this second one here. Then we have our working separate and we have our summary separate. So what this does is that it makes it very easy for someone using our model to know where they can go and change the relevant assumptions or where they should go to look at calculations or outputs. And the second thing is about how you format your inputs and your outputs. They should be formatted in such a way that there's a visual difference between your inputs and your outputs. So when someone looks at it, they can immediately know that this is an input and this is an output. So the general principle here is that your inputs should have blue text while your outputs should have black text. I prefer to have inputs with blue text and a gray background just to create that contrast. So for example, so here we have our corporate tax rate which we are setting at 40%. Now because this has blue text and the gray background, the user can know that this is an input and they can change this to say 25% if that is the relevant number that they want, or they can change it to 30%. However, when you look at this other cell, the inflation factor, this only has the black text. So the user knows that this is a calculation and they can follow how that calculation is coming about, but they know that this is a calculation that they should not change. So you can see that there's a visual difference between an input cell and an output cell. Then the second thing is about your number formatting. Now generally your revenues should be positive and your expenses should be negative. Cash coming into your business should be shown as a positive number, while cash going out of your business should be shown as a negative number. The reason for this is that it's intuitive for most people. You know that when you see a positive number, it's an increase or something going up. When you see a negative number, you know it's a decrease or something going down. So for example, in our model here, we can see our revenue line here, and this is a positive number, while we can see a cost line here, and this is a negative number. So that makes it very easy and intuitive for people to understand. The third thing is about our date formatting. You need to pick a date format and stick with it. You can't have date, month, year in one sheet and then have month, date, year in a different sheet. That makes it very hard for people to follow. So pick one date format and stick with it. For example, here you can see that we've gone with date, month, year, and if we go to our other sheet, we have the same thing, date, month, and year. Then finally, we have our sanity checks. So what are sanity checks? Sanity checks are basically things that help you identify errors in your financial model as you go. And you want to build in the sanity checks at each and every single step that you possibly can so that you can catch the errors as quickly as possible. When you send your model to someone and it has errors, you lose your credibility. So you want to catch those errors as quickly as you can. So for example, in our model here, we're buying an asset. Now this asset, we're paying for it in 5 installments of 20% each on different dates. So we pay 20% 4 months before the date of purchase, then we pay 20% 3 months before the actual purchase date, and so on and so forth, with the final 20% being paid on the month of purchase. So we know for sure that by the time you're acquiring the asset, you should have paid 100%, which is the full cost of the asset. And we can see here that this cell is colored green and there's an OK sign next to it. If we made a mistake and put this as 30%, then this goes to 100%. And of course, it's identified as an error. The color changes from green to red, and you can visually tell immediately that you've made a mistake and you're able to correct it, because of course you can't pay for 110% of the value of the asset as opposed to 100%. So when we catch this error, we can quickly fix it. And now we are back, now we're okay. If we go to our presentation outputs tab here, we also have one of the major checks that you should do, which is checking whether your model is balanced. Now, without going into a lot of detail, your model should be balanced in such that when you look at your balance sheet, the sum of your assets should be equal to the sum of your equity and your liabilities. And we will discuss why that is so in a different video. But that's one thing that you should check before you send out your model to anyone else. So here we can see that our model is balanced. If it weren't balanced, then this would display an error. So you can see that this is okay. So you should build in checks on a high level like this, or you should build in checks on a lower level like the previous example I showed you. The point is that you'll be catching your errors sooner rather than later after you've sent it to someone else. One more bonus point is that you should include instructions in your financial model wherever you can, because that will make it easier for the people using it. So for example, in our model here, if we go to our team cost section, here we need to input the number of people who work in a specific role in our company. So here the instruction says that we should insert the total number of people in the role at the end of each period from column J. So that means that the person using this model knows that when they come to this section here, what they should be inputting is the total number of people in the role rather than the new number of people in that role, and that will eliminate any confusion that there might have been. So hopefully, if you follow these principles, your model will be easy to use and to follow, and so when you send it out to your potential investors, they can understand your business the way you want them to. Thank you so much for watching, and if you want access to the financial model that we're using here, the link is in the description below. Please remember to like, comment and subscribe, and share this video with your friends. See you in the next one.